Welcome to Roman's Real Estate Report. Today I have a special guest again, McKay Wood, my friend mortgage broker. And today I would like to cover the really hot topic that's on my mind right now. It's the stress test. It's been around for a couple of years and it's about to change a little bit again. The government is tweaking things. Why are they doing it? What are the benefits for us? Can you please share? Welcome to the show today.
Good to see you, Roman. It's a pleasure. We'll make this a habit, I'm sure. Yeah, the stress test has been around for arguably over 4 years now. When the government regulations changed 4+ years ago, 4.5, they brought in this stress test, and it scared the heck out of everyone. Traditionally, I'll give you a little background. Traditionally, when we would qualify, previous to the stress test, there would be an increase in the variable side because variable goes like this. And so they would tack on a little extra, call it 1%, maybe even 2%, a little extra, so that if it goes up, they know that you still fit into the qualifying regulation. On the fixed side, it was convenient back then because you only qualified at the contract rate. So if you got your 2.7%, that's what you qualify at. Boom. And it was nice back then because you get what you pay for, so to speak. Government regulators sort of did their brain thinking that they do and came up with a brilliant plan to protect the indebtedness of Canadians. It's actually a very sound plan, in my opinion, and many people's opinions, holistically for the market, the economy. Less debt means a stronger economy, more stability in some ways. I'm not an economist, so I'll try not to sound like one, but that's the positive side. When the stress test came in, it scared everyone.
Yeah, I remember. Yeah.
You remember that?
Yeah.
I mean, every single one of your clients was like, Roman, that was probably one of the questions.
Oh, yeah.
What does that mean?
Everybody was rushing to get homes before it came into effect. Right? It created this artificial market too, right?
And there's been a couple times where they've tweaked it as well. And every time they tweak it or make an announcement, everyone freaks out.
Yeah, exactly. I'm just booking a buyer's tour for tomorrow, and I can't book it because it's overbooked already. It's insane. Right?
Wow.
So it seems like, again, they're introducing this. They're tweaking the stress test, and that's causing more buyers to rush and get it done, pre-qualify, get the financing done before they write an offer, right?
Yeah. So historically, that's what happened. And what does that mean for the average Joe out here? Is when they want to qualify now in the stress test, like the rewind, to when they first did it. Whoa, your 200 square foot place is now going to be like, you have to cut off a bathroom and a little bit of the rec room, and that's it. That's good. So that's the effect, is you get less borrowing power for your money, for your income, your debt to income ratio. So now currently, the stress test number is 4.79. So what that means is, if you go to qualify, you have to qualify at a 4.79%. And it's not the 1.5% you're getting. It's inflated, so you get less. And that's what the original stress test did. And in fact, probably a year ago, it was higher. it was low fives as well, 5.19 or something. And then they reduced, they felt like that was too protective. Then they lowered it to 4.79 about a year ago. And we were happy because you qualify for more. So now they've come out, and their announcement, which happened, a few months ago, uninsured mortgages, that means mortgages that do not fall under the banner of the mortgage insurance companies, 30-year amortization or more than 20% down,
Right.
or over $1 million, can't have any sort of mortgage insurance component to it, whether it's client paid insurance or a bulk policy that the lender will buy to secure that mortgage, a nice balloon around it, makes it, take it off their balance sheets, makes it beautiful for their investors. So uninsured mortgages, stress tested, I think it's 5.25. So it pumps it up a bit. It's not monumental, it's a smaller one, but it does affect things a little bit. Your 2 full baths is now like 1.5 bath. Yeah.
Well, who gets affected by this the most? In my opinion, it's the first-time home buyer, but does it really have an effect? How much?
No, it's not necessarily first-time home buyer, but you're right. First-time home buyer can only go to 25-year amortization if they have less than. So first-time home buyer, there's a little bit misconception, because a first-time home buyer might have 20% down, but they can still use their RSPs and roll it in. So there's some other benefits, but let's just say for the people that have less than 20% down, they're high risk. They're affected similarly. So just recently, the feds came out and said, that stress test we're going to do, it also applies to those high-risk people, the insured mortgages, first-time home buyers, or even if you're not and you put less than 5% down, you can still do that, by the way. You have to pay the same qualifying rate. So it's 5.25 or 2% above the rate that you're getting. So if you got destroyed credit and you got 20% down, and you have to go with an alternative lender, you can't fit into the major banks, they don't want you, and your rate is 3.5%, which is common, then you have to qualify at 5.5%. So that's the rule: 2% above, or the 5.25, which they call the benchmark rate. That's what they call it. That's the terminology. So when you hear benchmark rate, you're like, I learned that with Roman and McKay. I know what it means.
Okay. So whichever is greater, obviously.
That's right.
Yeah. Okay. And so this new, you said it's 5.25. That's the new, and it's starting. When is that starting? June 1st. Okay. So if you are looking for a house right now and you get pre-qualified today, within the next, 2 weeks before June 1st, will you get the old rate or the new one? How does that work?
Qualifying. So we've asked this question to a few lenders, didn't get a clear answer, but they said probably if you submit it for a rate hold, an official pre-approval, we may qualify you on the old stress test rate. But they didn't say absolutely. So
Yeah.
It kind of comes down to the feds. They control a little bit of the say, with the lenders. There's some relationship there. So So that's it. So it's okay. Don't stress out. But at the end of the day, you're getting a little bit less. And, just think in your heart, it's okay. I'm protecting the economy of Canada by not getting a little extra in my house.
Okay, sounds good. Fair enough. Well, there's so many things I want to talk to you about. I want to talk about gold. I want to talk about Bitcoin. I want to talk about all these fantastic things that are out there that I'm excited about. And I understand you understand a lot of the stuff too. But unfortunately, we don't have the time right now. Maybe we can cover these topics on another appointment. Whenever.
Have a good gold story. for next time.
Yes, yes, exactly. I want to hear all about it. So I guess I have to go, and yeah, it's 1 o'clock. Gotta go. Thank you. I am super grateful for your time. I know you're a busy man. Thank you for making time for me and for potential clients. I hope we can work together.
Anytime. Really, really appreciate it, Roman. You can search McKay Wood Mortgage Broker, and I'm there, or through Roman, doesn't matter. But yeah, I really appreciate you connecting again, Roman. That's great. I love it.
Awesome, awesome. Thank you so much. Have a great day.
Talk soon.
Bye.